So in a second, I want to get to what people can do. But before we get there, I want to, you brought something up earlier that's kind of been rattling around in my mind. You said that too many people are short-term focused. They're trying to work on the immediate gratification of right now rather than dealing with what's going to come down the pike. So as you have kind of described to us what's going on, it almost seems like the goal is to hollow out the middle class. Like there's trying to make more
I
have-nots
think it's a
and a
happy
few more
side effect
haves.
for them. It's a happy side effect for them, right? They're saving face, but that's also a happy side effect for them.
Yeah, and when as you say that happy side effect, that it's not trying to be fought against, it's not trying to be changed. And have you ever heard of the Gini coefficient? So the Gini coefficient to our audience members is as through all of history, as the haves and have-nots have grown too wide of a disparity, it is for all with the exception of one time in history has led to a revolution, and not a revolution of like let's just go ahead and topple some monuments. I mean like complete collapse of the civilization to restructure everything. It almost seems based off what you're saying to me that this like almost seems like it's the goal. Like all of the conspiracies that you're thinking about have all kind of come to manifest in this moment. And rather than everyone looking at it saying like, oh, everyone's really thinking this through, this is just human nature playing its way out, human nature of a bunch of individuals. And that's what the government is. That's what a company is, just a bunch of individuals all looking out for their best interest
Yeah.
right here and now, not into the future.
No, exactly. Because ultimately, right, what they're seeing is that based on calculations on how crypto has been trending over the last, 10 years, they have missed out on about $146 billion in capital gains tax and income tax from it. That's not the gains. That's the tax, right? And and look, again, it is not about not paying your taxes. It's about paying the fair amount, the right amount, and not being punished for something that the government couldn't get right. But yet they expect the individual who, you know, dabbled in crypto for 5 minutes to know what to do with, right? They're still proposing. There's so many different propositions. I am so happy, by the way, that President Trump shut down those 1099 DAs. We had a press release the same day or like before President Trump shut it down, where I said, this is extremely dangerous because the 1099 DAs will cause so much damage because the exchanges don't communicate with one another. So there will be so much double reporting and over reporting. It's not even funny. So that was good that that went away because that would have been absolutely detrimental. But now they're proposing that, exchanges have to report the basis. Well, the problem is this exchanges again don't communicate with one another. How do you know if the basis is calculated right if they're using any of the products that inaccurately calculate the basis? So we're back, in full circle. They're trying to do it right, but now the IRS wants these exchanges. And again, it's so they can blame somebody else, right? But because crypto moves so fast between wallet and exchange, keeping track of the basis is going to be difficult, especially if it's not right. And ultimately, I mean, listen, I can only guess. You can have your own conclusion. I think it's mainly the reason because I work for the government, right? The reason mainly is I don't want to take. They don't want to take responsibility. Like I'll give you an example. During COVID, I was working with unemployment because unemployment was like overrun, and I was looking in the system, and you can run social security numbers through it, and there was somebody in that certain state who wanted to get unemployment. And I ran her social through and I found her social attached to a different name. Okay. And and I was like, well, this is odd. So I called the employer listed on that report. And they said, yeah, person ABC works for us. I'm like, well, that's not their social. And it's like, yeah, I think they're illegal. I'm like, okay. Well, if you think so, you shouldn't employ them and let them use the social. It's not their social. However, they were already paid out, right? They already got back pay. It was in a state that paid the highest unemployment. So that's one thing, right? And I brought this to the director and I said, hey, this needs to be like taken back out of the account. They're using a social that is that is not their social. They're getting unemployment now. And this person whose social it is is not getting unemployment, right?
They're
Yeah,
getting screwed.
nothing we can do about it. I was like, so I notated everything, right? But again, nobody wanted to touch it. So then I ran through the system and I just put in, you can run like duplicate numbers. The amount of duplicate social security numbers with names that either existed or didn't exist. People who filed fraudulent unemployment returns, paid their $7, $8, $20 of unemployment tax. Companies didn't exist. Pay was never paid, right? Using other people's socials and all across. It's not just that state. I found those socials across in other state for people who have never lived in this state with different names. Do you think anybody cared? Do you know how much money went out the window to these frauds? To people who have actual fraud, to people that are illegal and using other people's socials, to people who, who just played the system. And the director didn't care.
So that's what confuses me is why are they unwilling to, so that's a direct screw up and they're unwilling to go back and fix that. But now there's
Yeah.
direct screw ups when it comes to harming Americans, but they're willing to go back and penalize those people, penalize the people that tried their best, but not try to penalize the people that got one over on them intentionally.
And made money on it. Yeah. Trust me, if I would go down this rabbit hole, I wouldn't sleep anymore. And the only thing I could do are the things I did. I tried to contact the companies, I tried to contact the government, and then I built my own product. And I offer complete audit support for a fraction of what other people pay because I'm going to cover my overhead. I don't care about making money. I care about getting it right. We're actually giving out this year about 125,000 to 200,000, you want to call it subscriptions, licenses out to accounting firms, to whoever, for free. Ultimately, that would be millions of dollars in revenue, millions upon millions if I would, but I want to get it out there because I want people to use it before the audits get too much, so we can protect people as much as we can. I'm giving it away. I don't care, right? Like I've paid for the software. I've built the system. And yes, eventually, some profit would be nice, but the goal is to ensure that people are okay. That the amount of pro bono work I do in my firm too, not the software, my other firm, because I just have this bleeding heart and people come to me that have been screwed. There's some indictments out there right now for people for these groups of people, whether it's calling themselves private banking or have these trust tax strategies. And it's all collapsing now, whether it's conservation easements that are collapsing now. And these people come to me and they're broke. Their life savings have been taken. They're maxed out to the limit and nobody can help. Nobody's helping them, right? I take them on and I help them, whether they can pay me or not, right? Because ultimately they were hurt. They were scammed. Those scammers are now on trial and the IRS is still completely penalizing them. They've done everything right. They went to attorneys. These attorneys are in prison now. They went to attorneys, they went to professionals. So why are they still being penalized, right? So we can ask the same question. They went to the people. If you go to a doctor and a doctor does something wrong, they get sued, right? Now, but if I go to a professional like an attorney, get advice, get opinion letters, whatever it is, go to an accountant, go to, whatever it is, two professionals who are supposed to know and give me advice, and they give me wrong advice and they steer me in the wrong direction. They tell me that what I'm doing is completely above board. Why are you being penalized? Why are you being, it's just, and don't get me wrong, there are some people whose sole purpose is to evade taxes, right? I get it. But then there's a lot of innocent people, right? Who are really who are roped in by these law firms, by these attorneys. Again, they're in prison. Two attorneys got 23 and 25 years respectively for doing backdating documents and getting people. Well, but again, and we can talk about this forever. It's like, why aren't they being held accountable? Like in my firm, I have errors and omission policy. If I file a return and you're being audited on a return I filed, I don't charge you for it. I'm handling the audit because I know what I put on the return and why. I'm handling the audit. I don't charge you a dime. right? We have audit insurance as well. We have, I mean, every return gets $1 million audit insurance attached to it. We're going to make sure that if you come to us, I'm going to make sure that you're protected because I'm the one that's giving you the advice. And you're coming to me because you don't know. And I don't want you to chat GPT it because quite frankly, chat GPT and tax don't match well, right?
Hmm.
I've tried it. I've ran I've ran some tax questions through it from like the CPA exam and from the EA exam, and it failed. It got
Yeah.
47% right.
A
You know,
lot of finance questions, it
yeah,
just it
no,
hallucinates and says random things that sound right. It all sounds right.
exactly. But
It just is
it's
wrong.
not. Well, and then you say, oh, recheck your answers, and then it changes the answers. It's like, okay.
Yep.
So that's why you need the human element because every situation is very unique, whether it comes to life insurance, whether it comes to retirement accounts, whether it comes to tax, all these things. And I don't say that I know all the answers. I have a group of people that I trust that have the same morals and integrity that I do. And those are the people I work with. So if I need something for insurance, I send them there. If I need financial, you know, management advice regarding investments, things like that, I send them there. Now, do I have my opinions? Of course. But the short term, again, we're going in the short term is cost segregation studies. They're great, right? But are you going to plan on buying a house every single year in order to keep that going, or do you just want to have a larger depreciation and take those losses if you can consistently? So there's a lot of different things to think about, and I don't know. I there's not much more I can do other than what I've been doing, right? I I
So
hope
then
it.
let me ask you this then. It sounds to me as if the IRS is basically hell bent on going after the average person. It sounds like they're going to continue to send out
Anyone,
these
they're going to
letters.
start with the highest earners. They're going to start with the highest earners, and then they work their way down. Now, of course, the biggest group is the middle class, like when everything, right? But they're going to
Mhm.
start on the top. They're going to work their way down.
So as they go through that, as they're kind of taking people out again, saying that you are guilty and now you have to prove your innocence or just
Mhm.
pay us back. And the reason for that seems like they're just trying to basically boaster and say like, look how much money we've got from these people, these criminals who evaded the tax code. That's
Mhm.
probably going to be the story that they're going to spin it with.
Yeah. Well,
So
hopefully, if they start with the highest earners, those people have money for good attorneys. You know, hopefully that will go to tax court a couple times, and precedents will be set. Precedents that are not in the IRS's favor. That require more proof as to why the IRS is right and they're not. But again, who knows?
so if that doesn't happen, what does the average person do?
Hopefully contact me. Well, not me directly, please, because that would might be a lot at one point, but through our software, right? Contact whether use our software, contact us, let us know that the situation you're in. We have actual people working on it, um, and we actually have actual contact forms. It's not you know AI chatbot driven. Um, hopefully come to us because like I said, I have a bone to pick now. I'm mad. I'm irritated because I tried to fix it. And listen, I understand I'm a nobody in the grand scheme of things with those people, right? I don't own a $43 billion company. I don't own, I'm not in the government, but they did take me serious when I spoke to all of them, right? Like I said, the Coinbase changed their terms of services after we sent them that letter. They must have taken it. They must have seen it as a big issue. Um, there are things that they see it, but they also know. They look me up and they're like, "What can she do?" Right. So the more people we can help, the more positive outcomes we have, the more we can go against these products that are being endorsed by companies that know very well that they're wrong. They don't even match their internal calculations themselves, right? So that's the goal, right? And the more precedent we set, the more we're right, and the more we can go have the positive outcomes against the IRS, the better, because that's how we're setting a precedent as well. So the initial struggles hopefully will decrease the more we can help.
How many people do you think are at risk at this point who have dabbled in crypto and NFTs is in anything at this point? Or is it really
Well,
100% because anyone who filed most likely filed incorrectly at this point,
well,
based off what you're
yeah. So
stating?
so 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 basically, anybody who has touched crypto, and I'm not talking about your $200-300 dabbling here and there crypto people, right? Um, they don't. I don't think that's not really their concern. I'm talking people, $20,000 of crypto and more that they've held. You know, um, 100% of those people are, well, let me rephrase that. There's people who have been smart and have really just bought peer to peer, um, you know, paid someone cash to get a hardware wallet. So there's no trace there really who got it. Now, if that person gets audited and says, yeah, no, I sold that crypto, I just sold the whole wallet. Well, who did you sell it to? Right. Then there's a name bar on circulation. But but if somebody comes and says, "Hey, I'm going to put on your hardware wallet, your ledger, your treasure, whatever you want to put it on, put $1 million of Bitcoin. Here's $1 million. Give me that. Now it's mine." Right? They don't have a footprint. Right? They don't have a KYC. So those people should be fine for at least until the person that sold it to them gets audited and they say, "Well, where is it?" And they give out the name. Right? That's a different story. Now, the people 20,000 and above who've had more than 20,000 involved and above, there's 100% of them are, if they've used anything that required eh, some sort of identity verification, whether it's KYC, whether it's, through Moon to pay your bank accounts, etc., they're 100% at risk. Now, again, they're going to go from higher to lower, right? They're going to start with the highest earners first. So there's a lot of these professional athletes out there who are boasting, "I'm putting all my paycheck in crypto," you know? And of course, there's the people, and I don't know if they're going to go after them. I mean, the government doesn't seem to like Coinbase very much. SEC tried to sue them. We'll see. But there's obviously all the owners of Kraken, Robinhood, Coinbase, right? All these companies too, individual and businesses that they might go after. Things are going to take a while, but I think they're going to go after the easier targets first. Because if they go something against someone like Coinbase, Kraken, etc., they have big attorneys who are going to make their life miserable. Now, are they looking for a win against Coinbase? 100%, right? Also, it's like, okay, you just stop wasting money on this. Just get it right, you know?
So as we look towards the future and what people, I mean, the past is already written. We can't do
Yeah,
anything about what's already happened. But for those who are saying like, okay, I have crypto now and I want to be sure that I'm doing things right, what are some things they can do? What are some common mistakes that people often make while filing their cryptocurrencies? And you've already laid it out. It seems like the system is flawed, so they really can't
yeah,
fix that.
yeah.
So what
I
can
mean,
they
if you
do?
want to go back and if you want, even if you don't want to amend, but you just want to have a contingency plan in case the audits start, go sign up for our program. Go sign up for our software. Go in, review everything, right? We are the only product that actually traces the basis for NFTs backwards. If you bought it, the basis is there for any product. But if you didn't buy it, we can actually trace it backwards. If you received it, we're the only product that can catch and utilize to take care of burn fees for validator accounts. I mean, we have done it in a way that it can be used in an audit, and it's very straightforward. And we also give you detailed reports. We follow the rules and regulations that are set forth by the government, because that's really what it comes down to. Whether I like it or not, I don't have to like the rules or regulations, but ultimately they're still going to come after you, and they're still going to make sure that they're enforced. So might as well get it right the first time. But we also have things built in that allow you to minimize your gains, maximize your losses, whatever you want to do. So we don't just, say, "Hey, this is what it is." No, we have things built in that allow you to really customize how you want to see it, and what's most beneficial to you in each tax year. Um, you can go back to the first year that you touched crypto. You can have your reports ready that if something comes up, there's an accountant portal. You can invite your accountant to it, that they can then handle an audit, or you can hire us to handle an audit crypto related. Or if you have an overall audit of your business or personal, and then they touch on crypto, we can work with your accountant, right? We're not, we want to help. We want to get this right. And again, it's about setting a precedent and ensuring that, because once the audit starts, it will become very, very clear, very, very fast that none of these products are useful in an audit at all. Your reports, the
Hmm.
money you've spent on them, are not going to be, uh, they, they can't be used, period. And so it doesn't matter if you filed with their reports, if you used it does not matter. You are going to have, like, they're useless. It's, they're not going to be used, period. And it's the features alone that exclude it.
So if that's the case, then I don't understand how the IRS can even go after individuals for that case.
Because you are responsible for your own, for you should have kept track of it. You should have seen what you did. You should have every transaction. It does it's written in the tax code. It's written on your tax return. It's written everywhere. You're responsible for it, period. But that's the thing. If those companies, if those products were registered, like were overseen by, that's why we met with the SEC FinHub division, right? Because it's a financial product, technically, right?
Hmm.
And they said, well, we don't regulate crypto. I'm like, okay, but this is not about crypto. This is about being a financial product that is calculated, but it's not regulated by anybody. There's no regulation. There's no licenses required. None of it. And that's one of the issues, right? These all these products are built by coders. And yes, there's probably tax attorneys and some accountants and CPAs that are involved, but they didn't pick everything apart the way we did. They don't understand the nuances, and they don't understand how it's going to go into an algorithm, because we worked with developers when we first started, and we fired about 3 or 4 of them, because when we met with them, they said, oh, this is going to be easy. And I said, no, it's not. Or the other people would have gotten it right because they have billions of dollars. They could have hired the best developers ever. I said, fine, show me what you got. And that's the exact same thing. They made the same mistakes these other products make. They put in an algorithm that would work on something like trade, brokerage accounts, right? Something that isn't as nuanced, has the different transaction types, because brokerage accounts are very easy. Buy, sell, buy, sell,
Hmm.
This isn't. And so there's a lot of nuances missing. And that's why, we finally found a developer that actually listened, that paid attention, and understood that he didn't know everything. And I understood I don't know anything about your software development, but I know about the taxes. And so we worked together and we finally figured out how to do it right. It was tedious, but we got there.
Well, Janna Scott, I'd like to thank you for coming on to the Fi Guys podcast and sharing your information with us. Unfortunately, you gave us a very scary story, a scary story that it sounds like there's corporations, even the government, who seem in line to kind of go after average Americans in order to get money back that they didn't know that they owed. But more importantly, you gave us a solution. And I'd like to give you the podcast, Janna, on how people can come to find you in order to gain that solution, in order to get help if they inevitably or terribly find themselves in this situation where they are getting audited for something they did 8 years ago, or for doing something that they thought they were doing right the entire time.
Yeah. 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 Well, our main site is defitax.us. And you can find us at DeFi Tax on, I believe we have Twitter and Instagram. I don't do social media. I have people for that. I think we have all those social media platforms as well. But defitax.us, you can reach us through our support, our info email. You can sign up and ask questions there. If you sign up right now, we're circulating through, random people will get completely free codes. It's kind of just random algorithm. So if you sign up, you might not be prompted to pay. You will just get a code to the highest level subscription, to where everything is included. Um, and and again, like I said, we're giving away a lot this year as well. So I'm hoping you find us and reach out if there's any problems, because I have a bone to pick.
And it seems that unfortunately the problems are likely coming. So I'm
And they
going to
will,
guess you're
and
going to
that's
get
the
very
thing,
busy
right?
soon.
Yeah, yeah, and that's the problem, right? It will come, and And maybe a lot of people, there's 10, 15 million people utilizing, the other 15 products right now, in the US and in other countries. And the problem is they will continue to use it because they're comfortable with it when the audits come.
Mhm.
But then once the IRS tells them, we're not using this, this can't be used, this can't be justified, it doesn't make sense, we already know. What are they going to do then? So I'm not expecting like a large influx on our end right away, but we want to make sure that there's at least a solution that can be utilized by accountants, by individuals, by businesses that can help protect.
Now, we have a common question that we ask to every one of our guests. Now, here are the FI guys. Obviously, FI stands for financial independence. And what we found from talking to so many different people is that financial independence means something very different to each individual. So, Janna Scott, might I ask you, what does financial independence mean to you?
Not having credit cards, being able to go and take my kids to the store, and my son, 16, says, hey, I want these shoes, $200, and I can get them for him without having to sacrifice any other part. Being able to have my kids, eat whatever they want, buy healthy food. I mean, that's really where financial independence comes in for me, making sure that I don't have to, like I used to during college, eat ramen or from the dollar menu at McDonald's. That my kids have the opportunities to start out their life healthy and stay healthy.
Janna Scott, thank you so much for joining us here on the FI Guys podcast. All of Janna's links will be linked down in the description. So to our audience members, thank you so much for joining us. Please be sure to rate, review, leave a comment, or more, and most importantly, share the FI Guys with one friend. Share this information that Janna gave us today with somebody who might need our help before it becomes an issue. And with that, I'm Chris. She's Janna. Later. This video podcast is sponsored by Monzon Wealth. The content in this podcast is for informational purposes only and should not be considered financial advice. We do not endorse specific products or services. Past performance does not guarantee future results. The opinions expressed are those of the host and guests, not the podcast sponsor.
It is crucial to consult with a qualified financial advisor or professional who can provide advice tailored to your specific needs before making any financial decisions, investments, or taking any other actions. If you are seeking specified help, you can reach out to Chris at monzonwealth.com.